This is Charting Crypto for Wednesday, March the 16th, 2022. I recorded a broadcast for you yesterday and I just decided to trash it. I wanted to do something a little more practical. I'll tell you very quickly what the broadcast was about. It was basically, as I have gone through these charts, looking for signs, looking for ideas, looking for success. I have found over and over again as I look through these charts, as I compare the markets and I look at what works. If you look back in time with Bitcoin, if you look back in time with Ethereum, and again, some of these cryptocurrencies haven't been around long enough to give you much of a record, but over and over, remember, the big player in the crypto world is what? Bitcoin. When Bitcoin goes up, it tends to drag a lot of the other coins up with them. Yes, they can each have individual things that happen. Maybe they pop up for a while and then that's it. But when it comes to overall market changes and things really happening, if you look back in time, whether you use the STC, which again is a stochastic MACD indicator, it uses both of those to be set up. I'm liking it a lot. I've been experimenting a lot with it lately. I've been having some great success in it. I'm using the TradingView charts. I'm using this STC indicator that's available there. And I have everything set up, of course, with my average true range bands, a 200 period moving average. Remember, the quick rule is has to be above the 200 moving average for up trades, has to be below for short trades. So when I'm looking at Bitcoin, I'm looking at Ethereum, I find over and over again that these things work if indeed you're using the STC. And again, it crosses at similar times to the MACD, the price percent oscillator, which is a percentage version of it. And I just noticed that if you want to see the big run-ups, just take your time, wait for a crossover going up, and then ride Bitcoin up. And then get out when it really starts to move over, turns red. Boom, you're done. You've captured a nice, sweet portion of the profit. You will find that you can do that back in time, and I've got to you can do that back in time again and again and again when it presents itself. That doesn't always do that. This is a big chart, doesn't set up all the time exactly as you want things, whether it's Ethereum or Bitcoin, you'll see that. Now, the other charts, you can check those out. Problem is with some of these, you don't have a 200 period moving average line. What I might suggest is use a smaller time frame. But again, you want to set up that time frame, go back, check it, see how well that works. Now, I want to give you what I've been doing here lately, just practice trading. I've been throwing some bucks in on my own. I'm not recommending that to you. I've been going back in time on the 195-minute chart, and I've been using, as a rule, I'm looking at the Bitcoin chart. What is that from? From Bitstamp, which is what's available here at TradingView. And I'm looking to see if we're above the 200 period moving average. And then I'm going and I'm watching what's happening with XBTF. Now, it has presented itself in the past with some trades that you've been able to jump into. Here lately, it's presented itself with a trade that was back on the 15th. In the morning, you had things go from red to green. I will tell you that as you look in the past and you check out what Bitcoin has done, I mean, again, you see how far apart these average true range bands are. That shows you the amount of volatility. When you start plugging in what your loss limits are, they're rather high. So what do you do, of course? You're going to reduce the amount of your X trade by the volatility percentage. You just divide it by that. That reduces it. If it's $10,000, then, and your volatility is 2%, then of course it immediately becomes $5,000 that you're putting in. So keep those kinds of things in mind. If you don't know all I'm talking about, take the training. I'll put it at the end of today's video, the average true range and the success method. You'll understand all of that quite well. But when you go back in time and you start looking at these changes, you can see how this volatility can really mess with you. Jumping in somewhere at the close of the 195-minute chart, as we look at that at 9:30 on let's see, the 28th of January, you see that as that crossed over and gave you the jumping in point, it popped up quite nicely and then rolled back over and then took back off again. Of course, what happened the whole time? Everything stayed green. You would have gotten a little shaky here when things popped down just below your entry point, but again, didn't hit your loss band and then took off and moved up, down some more, and then back up again, and then it started the real tunnel down. So you could have captured something from about here, from your jumping in point, that was all the way back here. So somewhere around a jumping in point of 36.49. And again, if we rode this up and waited for it to cross over going down, if you did the low there, it would have been 41.18. So again, from 36.49 to 41.18. That's not too bad in just the course of a few days. Again, something for you to look at, for you to practice trade. You can try this. The nice thing about XBTF is, unlike Bitcoin itself at these exchanges, the fees, the this, the that, all those other kind of things, XBTF, extremely liquid, extremely easy to trade, extremely easy to get in and out of, and it follows Bitcoin pretty much. And again, you can chart it. You've got a chart here. You can watch it. You can use XBTF, and you can use the charts. You can use the methods for setting up your profit and loss bands. You can use reducing your trade by volatility to make sure that you're protecting yourself and you're keeping your losses at a minimum and you're working to maximize your gains. All those things are potentially available to you. So I would encourage you to give it a try. Practice it. Doesn't cost you anything to do that. And of course, if you jumped in with just a share or two, I mean, what are you talking about? 39, 40 bucks, so you lose 2 or 3% of that. Or the whole thing. Not a lot to lose, to learn. It'll teach you how to get in. It'll teach you how to set your good till canceled sell orders. It'll teach you how to use your profit and loss bands. It'll do all those things for you. Why don't you just give that a shot? You can start easy and early. You can practice this so you get used to it. You see what the volatility is. You get comfortable with it. You maybe have some success with it. So guess what? When we have that big weekly vertical crossover occur and we see on Bitcoin and or Ethereum where it goes from red to green, as we saw back here, you are ready to jump into that and see even more success in your practice trades. And the reason I always throw the practice trade in there is we're not a stock calling service, or damn sure not a Bitcoin calling service. We're an education firm. We want you to practice. We'll get to practicing. There's a lot to learn here, and it's a hell of a lot of fun. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.